Hi there, welcome to an OCR 585 short on the low-income country of Malawi. Now, Malawi features in extract 1 of the case study. In particular, there's reference to Malawi in terms of her increasing trade to GDP ratio, and we'll come to that in a moment. One of the key aspects, though, is that Malawi is a very low-income country that borders Zambia, and even by Zambian standards, Malawi's economy is uncompetitive and very vulnerable to external shocks. So we're just going to have a little look at the Malawian economy and think about some of the contrasts with Zambia. So Malawi is landlocked. Zambia has one border, so of course you could use Malawi as an example of a country that may suffer from one of Professor Paul Collier's 4 development traps. It remains, despite recent growth, it remains one of the poorest countries in the world. As you can see there, GDP per capita in real terms, measured at constant 2011 prices, measured in dollars and adjusted for purchasing power parity. So in other words, real income per head, PPP, was only $756 in 2014. Indeed, the GNI was actually a little lower than that. But actually the difference is marginal, and the key is it's extremely poor. Their export sector is nearly half of their GDP, but they're spending nearly 60% of their GDP on imports. It tells you something about the trade balance in Malawi. The currency is the kwacha, and it's been under major pressure recently. It's been falling quite sharply. Here are some key macro indicators for the country of Malawi. The growth situation in the last 3 or 4 years has been actually pretty good. They're growing about 6 to 5% per year. The growth rate is slowing down in 2015. That's a pretty healthy growth rate. However, if you take away the population growth to get real per capita GDP, you can see that, for example, in 2013, a 6.1% increase in real GDP only translated into a 3.3% rise in GDP per capita. Indeed, you could make a case for saying that the per capita growth rate in Malawi is effectively just half of the GDP growth rate because of course, rapid population growth. As you can see from this table, a major macro problem for Malawi is inflation. Some of that is down to the weak exchange rate, which of course is forcing up the price of many basic imported products. Malawi has a budget deficit of around 4% of GDP, but another key feature of Malawian economy is the huge current account deficit, nearly 20% of GDP on average. We know that because of course exports about 48% of GDP, imports more than 65%. So the Malawian economy has one of the biggest current account deficits in the world. We need to put Malawian economy into a global context, particularly when one talks about competitiveness. Malawi is absolutely tiny in the global context. It's the 147th largest export economy in the world. Its total exports each year are just 0.01% of the world total. Cesar Hidalgo's brilliant work on economic complexity looks at which countries have the most complexity in the world, and Malawi doesn't score particularly well. It's the 96th most complex economy in the world. And we can see this from this chart. So this is a sort of a lovely way of illustrating the pattern of exports of goods from a country. The bigger the area, the higher the percentage. And you can see that raw tobacco, add in there raw sugar and 1 or 2 other products, basically raw food products, account for just over half of Malawian exports of goods. Indeed, 90% of their exports of goods are agricultural or mining extractive products. Less than 10% of Malawian exports are manufactured goods. So here is a really good example of a country which is heavily primary product dependent. And of course, the fluctuations in the world price of tobacco and sugar, beet and tea, they're going to have a major effect on the Malawian economy. Well, Malawi exports just a few products. Its import pattern is of course much more variegated. It's dependent on importing final manufactured goods, from vehicles to fertilizers to wheat to cars to petroleum. 2% of their imports of goods are postage stamps, which is quite interesting. And the biggest single import from Malawi, is fertilizer. So for example, a fall in the exchange rate would increase the price of fertilizer for Malawian farmers and be a major increase in costs affecting the short-run aggregate supply. South Africa is the biggest single source of imports. That's the pattern of Malawian imports. One of the features of Malawi in extract 1 is they feature in that chart showing a trade to GDP ratio. And Malawi's trade to GDP ratio has shot up in recent times. It's now well over 100%. Well, why is that the case? Well, I think the key thing, of course, is that Malawi has been exporting more, so their agricultural exports have increased. Farming is still nearly 40% of GDP, but Malawi has also been spending a lot more on imports, and typically the demand for those imports is fairly price inelastic. So if the exchange rate goes down and the import price goes up, they're going to end up spending a lot more on imports, causing the trade deficit, of course. Quite interesting in terms of Malawi's future growth prospects that the hotel sector, the restaurant industry, retail trade is growing now. It's nearly a quarter of GDP. And actually the good news for Malawi is that tourism is becoming an increasing part of their economy. That's part of the reason why the trade to GDP ratio is rising, because of a rising number of foreign tourists. Malawi has also joined a number of regional trade agreements on the African continent, so in theory that should help stimulate exports going forward. Well, finally, just think about the competitiveness aspect. So where is Malawi in terms of its competitiveness ranked against other countries? Keep in mind it's a tiny economy. Well, we find if we look at the World Economic Forum's 2015 global competitiveness rankings that Malawi is in the bottom 10 countries in the world for overall competitiveness. Its institutions are in the top 100, it's pretty good, but their infrastructure is way behind. Basic lack of infrastructure is a major problem. Their macroeconomic environment is ranked as the worst in the world, largely because of the very high inflation and the very, very high trade deficit. They have relatively good labour market efficiency, but the economy as a whole lags behind in terms of technological readiness, 133 out of 140. And three key problems highlighted by the 2015 survey were, first of all, access to basic financing, so their financial sector is underdeveloped. Of course, endemic corruption, which we often associate with many of these countries, and a high level of crime and theft. Malawi is still at the factor-driven stage of development. It needs, of course, to move beyond that if there's going to be a sustainable increase in per capita incomes to lift more Malawians out of extreme poverty. Okay, this is a little look at Malawi. Malawi features in extract 1. It's a tiny economy, but it does border Zambia. It's highly primary product dependent. Some good news on hotels and tourism, but clearly an economy that is vulnerable, extremely exposed to sort of global economic headwinds. Thanks for joining in on this one.